Welcome to another episode of Joe's Not Worried About It, where we turn investment anxiety into long-term opportunities. And welcome to the second episode of the series. And today, of all days, Joe's not worried about the election. And I'm hoping this video fits into your daily schedule as a much-needed reprieve from all the rage bait that's swirling around the internet from legacy media and all of the short-form content on the internet. So please sit back, relax, grab a single origin espresso, maybe a pen, and let's dig into why I am not worried about the results of the election from today. One reminder before we dig into it, for those of you who are new here today, my name is Joe Markman and I am from Markman Capital, and we are long-term investors and we only care about one thing. What is that one thing? It's secular trends. So more on that later. Most people worry about the wrong things, and the election seems like something you should worry about. I mean, it's only deciding the leader of the free world for 4 years, right? Like, what could that person do in office? And shouldn't their policies make a difference on what we invest in? The answer is, it could be. It could, if they have strong policies that shift certain macroeconomic factors one way or the other. But the election itself, the actual election day, now that doesn't matter. And that's why today, we're gonna be digging into a few things that show you why, regardless of who's in office, the stock market's probably gonna go up. All right, so now look at your screen right now. I just pumped up a big graph that goes back to all the way to 1901. Red is Republican, blue is Democrat. And I want you to notice something. There's really only one super large downtrend, and it is in a red presidential time. But I also want you to notice what that year is. If you look right here, it's 1928-ish. Does that sound familiar? Is that the Great Depression? Yes. So really, unless there's a large macroeconomic event, like the banks getting squeezed or something like that, the election itself really doesn't matter, because generally stocks go up with Democrats and Republicans, and I'm here to show you why. So let's break that down. Presidential stock returns by the numbers, because the media is full of disinformation, misinformation, however you want to say it, of which candidate the markets will perform better. Well, since World War II, stock prices, as measured by the S&P 500 or the Dow Jones Industrials, have generally done fantastic. The S&P actually has gone up an average of 10.26% over the last 100 years or so since its inception. The Dow, which is a much narrower, smaller index, which only has about 30 businesses, but has been around longer, since 1896, the compound growth there has been only 5.42%. Researchers at Liberum, a United Kingdom-based investment bank, found that returns under Democratic presidents were averaging 10.8% a year, while under Republican candidates was only 5.6. And you're like, hey Joe, haven't you been saying this whole time they're even? Like what? That's not even. Well, don't forget, the one thing we keep harping back to, or at least the one data point, is the Great Depression. The market declined 77% in 1 year. And that was underneath a Republican president, Herbert Hoover. And guess what? That 77% is enough to skew the data, and their own research points towards it. After accounting for that downfall, it's basically flat between Republicans or Democrats. And I'm gonna show you again why. There's only one factor that really makes a difference on the top returns for presidents. So look right here. There's a table right on this screen, and what you're gonna see is out of these 10 presidents, it's split 5 Democrats, 5 Republicans. And can you guess what the one factor is that juices the most returns for a presidential candidate? It's did they get a second term or not? Not Republican or Democrat, is did they get a second term to keep going with the market? And this actually makes sense, because the markets love predictability and stability. And if we know what the president already did in the last 4 years, and it was generally not affecting the markets or was great for it, then why won't the next 4 years be the same? And that is the biggest thing that makes one president better than the other. Did they get a second term? What I'm saying today, guys, is that voting is important. You should go out, like everyone else here, and vote today on the election day. But what I'm also saying is it's not important when it comes to protecting your assets in the stock market. Either way, Republican or Democrat, it will go up. So I want you to know that this next video, what I'm going to be sharing with you is 5 secular trends that Markman Capital really believes in and is currently shaping our very future. So please stake your claim in the future today by investing in it, and invest in it with me. So please like, subscribe, and I'll see you next week. Thank you for tuning in.